Before the opening bell, U.S. indices dropping lower to finish the week on Friday, pressured by shares in semiconductors and semiconductor equipment, tech hardware and equipment, and transportation sectors. On the economic docket, change in non-farm payrolls decreasing to 155,000 in November, while change in manufacturing payrolls adding 27,000 jobs in November. In other news, the unemployment rate remaining unchanged month over month, 3.7% in November, in line with expectations. Wholesale inventories improving by 0.8% month over month in October, while the University of Michigan Sentiment Index that remained unchanged month over month in a preliminary read of 97.5 in December. All while advancers ahead of decliners, 91% of S&P 500 constituents trading lower on Friday. Now, after the markets closed, Facebook announcing that it will plan to buy back $9 billion more of its shares, the company previously authorizing share repurchases of up to $15 billion as part of a program started back in 2017. FedEx downgraded from buy to neutral at Bank of America Merrill Lynch, and Asian markets losing ground today. The Nikkei down 2.12%, the Hang Seng down 1.19%, China's CSI 300 down 1.16%, South Korea's Kospi down 1.06%. European markets lower and U.S. futures calling for a negative start. Now, there are no major earnings expected today, while on the economic docket, 10 o'clock in the morning, we have the October JOLTS job openings report. Now, in terms of the markets, the S&P 500, that sees a bullish bias above 2,600. The Nasdaq sees a bullish bias above 6,507, while the Dow Jones intraday sees a bullish bias above 24,080, and that's in focus. The relative strength index lacks downward momentum. Long positions above 24,080 are favored, with targets at 24,565 and 24,715 in extension.